Hello guys, this is Money Effects. Welcome to my channel. So in today's video, I'm going to be explaining the reason why ICT's break of market structure doesn't always work like everyone says. So I've been an ICT student for 3 years now, and over the years I've mastered most, if not all, of ICT trading concepts from order blocks to PD array metrics all the way to the OT pattern recognition concepts. But my first year as an ICT student was quite rough actually. I wasn't really profitable to be honest, but don't get me wrong, okay? I'm not trying to say ICT's concept failed me. No, it didn't. Actually, I was pretty good at analyzing the market using ICT. And I still use ICT today as the primary method of market structure analysis. But the problem was that I kept losing trade consecutively. Like I was just having multiple string losses. I would get my bias after analyzing the market, then I would set my entry and stop loss. Sometimes price respects my entry level, but most of the time, about 60% of the time, and I would get stopped out and price will reverse back to the direction I was expecting it to go. So I tried figuring out what was going on and eventually I realized my entry levels were the problem. At least for me, ICT breaker structure wasn't really working out. So I basically tried figuring out an alternative mode of entry. Though it took months, but I eventually figured it out. So, about many months ago, my friend and I developed a mode of entry called Steven Breaker. So, in this video, I'm going to be explaining how it works, why it's way better than ICTs as a model of entry in the market. But first, I think I need to show you some example of where ICT's model failed in the market. And I'm assuring you guys, it's not biased. If you're an ICT student, you can also look it up yourself after watching this video. And lastly, I'm going to be making a full tutorial video on how to enter the market using my strategy called Steven Breaker. So do make sure to check it out. I'm going to be leaving a link in the description below. So all that being said, let's get into the video. Now, first off, I think we all need to agree on how ICT's breaker structure works. So basically, there's a breaker structure in a bullish trend, there's a breaker structure in a bearish trend. So let's start with a bullish trend. So say for instance, we have a bearish trend, so price start coming all the way down, and suddenly price, the price level goes above the last high. That's a breaker structure. So price is supposed to retrace all the way down into your order block and start going up. So basically, that's how a bullish breaker structure is supposed to be. Moving on, we also have the bearish breaker structure. So strip price start going all the way up, retracing, going up, retracing, and all of a sudden price goes below this. Goes below the last low, this certain low. So price goes below it. Price is supposed to come all the way up into your other block and start going down. So this is for the bearish break of structure. Yeah. So we're gonna be looking at Euro USD. This is a 4-hour time frame. So what I'm trying to do is to like show you guys first on the higher time frame level, then later on we're gonna go to the lower time frame level. So this is a 4-hour chart of Euro USD. So I'm just gonna give you one example right here before I move on to um the next pair. So as you can see right here, so basically, in case you're new to ICT, the way it actually works is, let's say for instance, you're trying to enter the market from a bullish perspective, right? So price comes all the way down and price start going up. So what you just have to do is you just find a way of entering the market when price start going up, right? So we're gonna take a look at this. So let's first of all let's just highlight all the sell stops. So basically, sell stops are like the resistance. So people who trade retail, they call the sell stops resistance. But we as ICT students, we who trade institutional trading, we call it sell stops. So we also call this buy stops. Why they call it support. So we don't call it support and resistance. We call it sell stops and buy stops. So when you take a look at this sell stop, you're gonna actually see right here. So let's take a look up close. So you're gonna see right here that price broke this particular structure. So the assumption is price came all the way down. So there was a break of market structure. So price will eventually go up, right? So on a 4 hour time frame, price um is supposed to respect, I mean, according to ICT's model of entry, price is supposed to, respect this certain order block. But as you can see right here, price did not respect it. Price didn't respect it. I think price came all the way down. So price came all the way down. So price tried going up, but at the end of the day, it actually stopped it out. So if you have entered into this trade, you will actually be stopped out. Right. So next up, we're gonna be checking out pounds. That's GBP USD. So first of all, I think I should highlight the sell stops. So let's just take this right here. So then it's gonna apply this. So let me just draw the pattern, so you can actually get have a clear sight of how it actually looks. So then down, then up, and down, then up. It's very simple, but sometimes it could get tricky, right? So this is the next sell stop. So after that is this sell stop. I have to do this for a second. Yeah. So the main sell stop I actually want us to check out is um this right here. So as you can see, it's okay. So this certain auto block was responsible for breaking this sell stop. So according to ICT, this auto block it's supposed to be a strong auto block, but as you can see, price broke this auto block, meaning it was like invalid, so it didn't actually work. You know, and don't get me wrong, I'm not trying to say ICT's mode of entry is trash, it doesn't work. It actually work. I can even show you some places where ICT's model actually works. But for the sake of time, I'm just gonna like show you those places where it doesn't actually work. But I should let you know ICT's model really work, but it isn't 100%. It isn't even up to like 80%. Okay, so next up we're gonna be moving on to USD JPY, the Japanese yen. So I'm gonna be checking this right here. So this is the 4 hour time frame, right? So let me just go to 1 hour time frame. I think this one actually, yeah, this one right here. So again, I'm gonna have to point out all the sell stops. So the typical assumption is price came all the way down and price will actually start going up. But um most of the time doing this, using a form of entry, as a form of bias is very wrong. It doesn't actually work that way. So I see most of people, even I myself, in my first few months of trading, I actually use mode of entries as a form of analysis. That's very wrong. But just for the sake of today's video, we're gonna be focusing on break of market structure. So we're gonna be checking this out right here. Just so we've done this. So yeah, this should also be included as well. So this should also be included. That's for a 1 hour time frame. right? So basically, it's supposed to be this way. This is a black candle, this is a green candle. So you're gonna add this black candle along with this green candle. But as you can see, price stopped it out. Price stopped it out. If you enter into this trade, you will lose money. So there are a lot of there are a plethora of examples where you see, ICC's model of break of market structure actually failing. You know, like let me also show you this example. Um, don't really remember where it is. Yeah, this is actually the structure I was supposed to show you first. So you can see right here is so it was like this, right? So price came all the way down, went up, came down, went up, came down, and there was a break of market structure according to ICT. But at the end of the day, that order block was invalid. Price broke the order block. So if you're somebody who trades, UJ and you use ICT and you anticipating for a bullish trend, you could actually lose quite a lot, using just basically using ICT's breakup market structure. Yeah, so I'm gonna be talking about one last example on the higher time frame before we move into um the smaller time frame. So I just want to show you guys this certain setup right here. So as you can see, let's just for the sake of time, just let's assume this right here is the TP, right? So let's just try to create a pattern. So this is the low, there's a high, there's a 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 low, there's a high, this. So now there's this yeah, this right here is what I'm trying to show you guys. So this is a 4-hour time frame, right? So this is an ICT order block. This is an ICT order block. So as you can see, price broke this order block, making the order block invalid. So that's just another example. So like I said, there are a lot of other examples you can check out for yourself on the charts. Doesn't matter any currencies. It could be Australian dollars. It could be Swiss franc. It can even be crypto. It could be any trading instrument. You will find flaws in ICC's model of breakup market structure. So next up, we're gonna moving on to gold. So now we're gonna be checking out ICT's breakup structure on the smaller time frame. So right now this is a 4-hour chart. I just want to show you this so we have a long-term perspective, or at least a short-term perspective of where the price is going. So in that case, we're talking about the bias. So as you can see, price is in a bullish trend. So we assume price will keep going bullish. So um the the area I want to talk in particular is this area right here. And as you can see, um price kept going bullish even though it kept retracing and all, but it came up to this point and price retraced, or whatever you can call it. You can call it a mitigation, you can call it retracement. Price came all the way down in the short term and continued going up. So I'm just gonna refine down to the 15-minute time frame. Okay, so we have retracement here from the 4-hour time frame. So we expect price to keep, going bullish, right? So as always, we need to first highlight all the sell stops. So it's gonna be this. Okay, let me use the arrow so I can make it easier. So we have this, then this, Then we have this, all the way to this. We have this, and we have this. So price started going bullish again. So this in particular is what I want to show you guys. So you can see price, you can see this order block right here. It went up, broke this high, and came all the way down. But it didn't actually, respect the order block. Though at first, if you actually take a closer look, it looked like it was going to respect the order block. You know, um, price went up, broke this sell stop, came all the way down, went up, but eventually it got stopped out. It got stopped out, and price reversed and hit the TP. So you can define this as a TP, or you could define this as your TP. It all depends. But the point I'm trying to make here is price did not respect this order block, even though the price, even though the order block was responsible for breaking this high. So that's just one example right there. Okay, so I'm gonna moving on to the next example. This is gonna be the last on low time frames, and this is a 4-hour chart, still gold. So this particular setup, I just want to show you guys. Let me just try to see if I can find it. It should be right here. So let's check it out. So I'm gonna zoom in. Yeah, should be right here. So let's go down to the 15-minute time frame. I hope I'm right. Down to the 15-minute time frame. And okay. I think it should be it. I think it should be it. So so I do tell you guys, I'm not trying to, condemn ICT's break of structure. I'm not trying to say ICT's method doesn't work. It really works, it really works. But all I'm trying to say, my point is it doesn't always work. So you just gotta have that in mind. I'm not trying to tell you, to stop using ICT's break of structure. I'm not trying to tell you to, go and find other ways to, enter into the market. I'm just trying to let you know that it is imperfect, right? So you can see this right here in the 15-minute time frame. So you can see there's this eye, and there's this eye, and there's this we also have this eye, and we also have this eye. So starting from the bottom, we have this high. This auto block broke this high, right? So we have our auto block. So as you can see, price actually respected this auto block. So it's a valid auto block, right? So let's move to the second one. So same thing, price respected this auto block. So it is valid as well. And let's move to the third auto block. Now this auto block right here is kind of tricky because it took a lot of time, for the price to come all the way down. So price tapped this auto block right here, tried going up, but eventually I think the demand, the demand to go up wasn't enough, so it eventually came all the way down. So it got stopped out. So this certain auto block is invalid, because it got stopped out, right? So at the end of the day, you might make the argument that, it's not that bad, you know, it's not that bad. No strategy is 100% correct. No strategy is perfect. You can make that argument, but all I'm trying to say here is that you should know that ICT's breakup structure is not always perfect. It doesn't always work. Sometimes you're gonna lose using auto blocks in the market. So at the end of the day, it's all uncertainty. So this is going to be the end of the video. If you like this video or if you find it helpful, please do subscribe and give this video a like. And please do not forget, I've made a video on my new strategy, Steven Breaker, which is way better than ICT's break of market structure. If you're going to check it out, you can click on the link in the description below. See you in my next video.